You're listening to the YMB and BTC podcast. Welcome to episode 14. Today, we have another awesome guest with us, Jay Shore, the founder of Coinabul.com, the first ever Bitcoin to gold service. His history in the Bitcoin space is fairly long compared to that of many others, and he'll tell us all about it. He'll explain how he got into selling precious metals for Bitcoin and detail some significant banking issues that he had at one point. On a somewhat related note, the IRS has recently declared that for tax purposes, Bitcoin is property as opposed to currency. We don't like taxes much, but we'll discuss whether or not the ruling might still bear some benefits. Speaking of the IRS, next week, we'll hear an economics professor give his thoughts on the ruling and on Bitcoin in general. You won't want to miss that. Today, however, your hosts are Tim Baker and myself, Daniel Brown, and we're joined by a special guest host, Jay Shore. Here we go. Welcome everybody to the YMB and BTC podcast. This will be episode 14. Today is March 28th. It's a Friday that we're recording on. You guys will be hearing this for the first time in about a week. Today we have another special guest with us. Jay Shore is the founder of Coinabul.com. It's another precious metals dealer that accepts Bitcoin. Is it exclusively? Do you exclusively accept Bitcoin?
Yeah, thanks for having me, Daniel. We are actually the first, and yes, we exclusively accept Bitcoin.
Awesome. Yeah, that's great. I mean, I remember it's been a little over a year that I've been dealing with Bitcoin things, and I remember seeing you a while ago and thought it was pretty cool. So I'll just start with a pretty straightforward question. Tell us how you got started with Coinabul, how everything went, where you got the idea. Just tell us the story.
Well, I've been into commodities since I was young. I've been collecting bullion since before I was in my teens. So it's always been a fascinating thing to me to own commodities and watch the markets and see how they behave. Bitcoin was no different when I saw it come around. I originally became interested in Bitcoin when they were worth, virtually nothing, like 10 cents, give or take. I kind of stuck around and watched the market for a little bit and started generating some Bitcoins on my old laptop that was just kind of sitting in the corner doing nothing. And eventually Bitcoins kind of became worth something. It wasn't, where we are today, but they broke the dollar barrier. And I got very interested at that point. And, we had our first miniature bubble, where we hit 32 and then it crashed pretty hard all the way back down to $2. I just took that opportunity to stock up on Bitcoins and started working on Coinabul. I did a market analysis and looked at the Bitcoin market and determined that there was, in fact, a large amount of demand, as my gut instinct had told me. So I started building some software and ended up with a really nice custom tailored package and did all the compliance stuff and the business foundation and all of that, and managed to launch in 2011, and we've been around ever since.
What was the response when you first started? I mean, when you're the first to something, it should always be interesting just to see how it goes. Did it take a while to get business? Or, I would imagine that maybe just anybody who's interested in Bitcoin would automatically be interested in precious metals. How did it go when you started?
Well, as I'm sure you can imagine, the Bitcoin community themselves tend to be very, very skeptical. Just as a general rule, anything in Bitcoin is looked at with a shadow of doubt.
Yeah, that's
true. When you're dealing with something particularly high value, like ounces of gold, there's just far increased skepticism compared to traditional things. So it was a bit slow at the upstart. But, Bitcoin was very, very young at that point. So Bitcoins weren't worth a lot. There weren't a lot of people that actually had enough Bitcoins to buy ounces of gold. And the ones that did, they just weren't easy to convince as far as becoming our customers. But eventually we developed a market share, and it took, I would say 2 months before we really started going with guns blazing. But after that, it's just been continual growth.
Yeah, that skepticism is definitely something interesting with Bitcoin. I remember mentioning a couple weeks ago how when you're on the forums, it's amazing how almost every single buy offer or sell offer, anybody that wants to trade in the marketplace, I mean, I'd say easily over half of them, probably closer to 80 or 90% of them, somewhere in there, somebody's going to be accusing them of scamming or something, which on the one hand, it's good to be careful, but it's still, I don't know, it can get annoying sometimes too.
It's something that goes beyond annoyance, where it keeps the sort of conventional venture capitalists and investors from being comfortable putting any money into the community. I mean, even the legit services tend to be attacked so much that, like, when you look at, for example, Mt. Gox, it's hard to tell if it's a genuine attack or if it's a brilliantly planned heist,
That's true. It's tough. I guess it's just the irreversible nature of Bitcoin and the idea that nobody's kind of moderating anything. You're in charge of your own money, and you have to decide who to trust and what to do with it, and there's nobody in charge. But I know that was a particular issue for you. I guess I'll let you tell the story. I think it was a couple months ago or whatever. But you were having some banking issues, and people were waiting quite a while on their metals. You want to tell us about that?
Sure, I'd be happy to. Basically, what happened is the banking community as a whole just sort of decided that they did not want Bitcoin to exist, and they were going to do everything they could to shut it down. I had all of my bank accounts closed without any warning, and as I'm sure you can imagine, being in the business that we're in, banking is very important for us in particular, but for any business, whether it's a small taco shop or a large company like ours, business is fully dependent on banking. I mean, you have to have flow of funds. And yes, in the Bitcoin world, we have an alternative flow of funds that can really help us sort of avoid all of the nonsense in relation to banks. But at the same time, you have to have that crucial junction in between the Bitcoin ecosystem and the traditional ecosystem, because I can't pay my FedEx or insurance or staff bills with Bitcoin. So basically what happened is all of my accounts were closed, even the accounts that I had in hibernation, which were unused for the purposes of backup accounts, because I always maintain redundancy in everything across the board. So at that point, I was frozen out of the financial system, in essence. All of these banks where I had accounts, it basically insisted on giving me a cashier's check, which, of course, I would not be able to deposit anywhere. So I had to go back and forth with them for literally months until I was able to extricate my funds in the form of cash. So I had to, store cash in our corporate vaults and maintain our operations that way for a period of months. And in the meantime, I wasn't able to do anything in terms of our suppliers, in terms of FedEx, nothing really. And it was a great, great struggle to actually get funds moving around. And in essence, the only thing that kept me going for the course of, I would say, a good 4 months there, is that I was able to convince a bank to give me an account after, weeks of negotiations. And I would get an account, and I would be able to use it for like 2 weeks to a month. And then somebody all the way up at the top levels of compliance or the board of directors or whatever, these banks would pull the plug. And in the meantime, I was able to sort of jiggle a little bit of funds around and pay my FedEx bills and get some money to my employees and the bare minimum. But at the same time, I was just kind of like running here, there, and everywhere, shuffling funds around, knowing that the accounts that I had managed to negotiate the openings thereof would be closed very shortly. And I was finally able to experience some resolution, I would say in October of 2013. And I wasn't able to get, all the way up and running. I've still been having difficulties all the way up until, give or take, a month ago with the complete schema of banking that I actually need access to. But At this point, we're very solid and smooth, and due to the total refactoring of everything that I had to do over the course of that 6 month period, things are actually moving much more quickly. Our payment processing side of things is much reliant on the traditional banking infrastructure, so that we are able to move things more quickly, and things are looking good now.
What did it take to kind of get things working? Did you just have to find a bank that was willing to work with you, or what all did you have to do?
Yeah, I ended up calling like 100+ banks. I had my personal assistant sitting there on the phone for like 9 hours a day for months straight, while I was in the other room sitting on the phone for that same 9 hour scope, calling different people. For just months, until we finally pestered somebody into giving us an account. And it's actually one of the banks that initially denied us, not one of the ones that closed our accounts or anything like that. But they just told us, "I'm sorry, we're not allowed to do that." But we just kept working with them and negotiating, and we were finally able to get something done.
You mentioned a couple times your employees. Until recently, I thought maybe it was just kind of a 1 or 2 guy operation, just kind of running a side business. How big are you, and how do you relate to the competition and everything?
We have around 10 guys serving various purposes within the organization: bookkeeping, assistance, disbursement, customer service, things like that. I mean, realistically, it's hard for me to relate to most of the competition that does exist in the ecosystem, because it's all based on pre-existing non-Bitcoin business. Little orders that serviced a small area in their neighborhood, and they just so happen to have an online shop, and they just so happen to add BitPay or whatever is their payment processor, and they kind of stumbled into the scene. Whereas we came into it when Bitcoins were worth basically nothing. I remember it actually cost give or take 400 Bitcoins per ounce of gold.
I could be wrong, but I don't think we ever officially passed gold at the peak. I know we were close, but I don't think we quite reached it.
It depends on the exchange you look at. I think that one random Chinese exchange, it may have been negative parity by like $1 or $2, something like that.
Yeah.
But we almost got there.
Yeah, that's pretty cool, and hopefully it happens eventually, although I would rather see the dollar value of both of them go up rather than just Bitcoin overtaking gold. That doesn't bother me as much. I would rather just see both of them. Or well, I guess what I most would like to see is the dollar kind of...
Just down with the dollar, Daniel?
Well, I mean, it's not like I want it to go away. It's just I want everyone to realize that it's worthless. I don't know.
The bottom line is that gold is the monkey, the gigantic gorilla in the room, and Bitcoin is still a little mouse running around in the corner. Not to denigrate Bitcoin or anything like that, but when you compare the market caps and you look at the amount of institutional investing that occurs, gold is just absolutely ridiculous. Right. I mean, there's trillions of dollars transacted every day in gold. In options and futures and physical gold and so many different vehicles. Bitcoin, it's new. So right. Yes, it's be jumping all over the place, and it might surpass gold, and then it might crash like it did recently, depending on how recently you're listening to this podcast from when it was recorded. But in either case, it's not going anywhere. I think that as the Bitcoin ecosystem sort of improves itself and we see more goods and services that are being offered by large retailers like Overstock and Newegg and people like that, people are definitely going to utilize Bitcoin simply for its utility.
Yeah, that's pretty awesome. And that's exactly right. We're just still new. It's hard because it feels like that's all we've ever said, but I think Bitcoin is still going to be new for several years to come, and it's just going to take a while to get out there, or who knows, maybe Bitcoin won't get much farther, but cryptocurrency in general definitely obviously has potential. That's why all of us are here. That's why we have a podcast about Bitcoin. That's why you're dealing gold and silver and Bitcoin. Of course it has potential, but it's just something we're still kind of waiting to see play out, even though we have seen some pretty awesome success so far.
No, yeah, I don't really like the 500% increase of Bitcoin. That's not good enough for me.
I'm just going to assume that was sarcasm.
No, yeah, that's not very good sarcasm.
No, we're definitely going to see stability improve and utilization improve in the coming years. And I wouldn't say that it's potential that Bitcoin has, but momentum that Bitcoin has and other cryptocurrencies as well. It might not be Bitcoin that is the vehicle of the future per se, but cryptocurrency in one form or another is going to stick around and certainly be the next big thing on the internet.
Jay, you said something, I mean, it was pretty much right at the beginning of the podcast, so it's a little bit removed from now, but you said that you were interested in commodities at a pretty young age. I think you said before you got into your teens. Was there someone, I don't know, I guess just in your life who got you involved in that kind of stuff, or did you just pick that up from, I don't know, whatever?
No, that honestly just comes from me being a complete autodidact. I never really absorbed anything much from the people in my environment. I always determined what I wanted to do and sort of explored that on my own. Whether it was building something or learning about how markets work or going out and actually laying cables in a roof or whatever it may be, I always like to sort of do my own thing.
Was there someone that you read that kind of put you down that path, or just like a specific author or somebody?
I wouldn't say that there's any particular author. I was always interested in science, and I was lucky enough to have a family that sort of fostered that interest and allowed me to learn about all of the sort of scientific aspects of the universe that I wanted, whether it would be electronics or astronomy or medicine or whatever I really felt like. They supported my interest in learning things.
I know I speak for myself, and I think I speak at least a little bit for you too, Tim. But I think for the most part, we're in the same boat about just doing what we kind of want to do. I mean, that might be true for a lot of people with Bitcoin because people get into it, people realize it, and are interested in it, and the people around them often are not, or are confused, or don't understand it, and things like that. So, well, I mean, it's getting better just because it's getting more popular and people are hearing about it and understanding it more. But yeah, a lot of people just are kind of out there and trying to do something new and trying to be independent and figure things out. And even with silver, it's honestly, when I first bought silver, a large reason was just because I thought it was cool. I didn't really have many facts behind it or anything. I just kind of thought it was cool. Thought it would be nice to have some sort of investment. Bought some, and that's what led me here. So,
yeah, that's. I mean, I would definitely be lying if I said that I was not motivated by the dollars and cents behind commodities. But it's very similar for me with metals. That's how I ended up in Bitcoin.
You may have already said this, but where is Coinabul located?
We're based in Wyoming.
Okay.
I remember just recently listening to Let's Talk Bitcoin, and they were saying how the Ethereum project sort of had to move its base to Switzerland just because that's where everything was easiest. They could work with the government. They just had a better understanding of how they could work and what they could do. Did you take anything like that into account, or do you think you'll have to in the future? Are you going to have to worry about jurisdictions or anything like that?
Yeah, I've absolutely done that cost-benefit analysis, and unfortunately, the United States is going to be our home in perpetuity for a variety of reasons. Number one, our supply in the U.S. as far as precious metals is unmatched. We have such a rich history of producing our own, as well as importing and exporting, and not only that, but actually storing for other nations precious metals, that our costs are unmatched anywhere in the globe. So if we were to go to Europe, we would have to charge our customers a lot more. Same thing basically with anywhere else in the world. And that's why, for example, if you come and you buy from us with Bitcoin, you're going to get a better deal than if you walk into the Perth Mint in Australia. And I've actually spoken to some of my Australian customers about this very fact on multiple occasions.
Yeah.
So that's certainly something that keeps us in the U.S. And it's a good reason to stay here. I mean, it provides a competitive edge and bolsters our economy in the U.S., which certainly, needs a little bit of help at this point, and I don't mind doing that. But secondarily, there's also the AML KYC procedural guidelines in the U.S. that are basically cutting edge for the rest of the world. I'm sure you're familiar with the FATF and the guidelines that they set forth for nations all over the world to follow. And the United States is the one that actually created the basis for those guidelines in the FATF. And every time that the U.S. changes and updates things, it ripples throughout the globe. So expatriating and moving things operationally to another nation really doesn't do you any good in terms of the AML KYC stuff. Because all you're doing is trapping yourself in legislation that passes in the U.S. that you have to update your model with, or you ignore it and then you get screwed in the long run. So from that perspective, as far as the compliance side, it's just simply better to be based in the U.S. if you have to have a stringent compliance architecture.
Right. I mean, I don't know what your political views are, but I think Tim and I would say that kind of stinks on the one hand, just because there are so many compliance things and so many regulations that are annoying and pointless, honestly, and they end up hurting more than they help. But that does make sense. I never really knew how much of a ripple there was from the U.S., but yeah, that makes sense. If it's going to get around the world eventually, you might as well be in the easiest place to deal with it.
Right. I mean, there's two ways of dealing with the AML KYC stuff in relation to Bitcoin as it evolves, which it obviously is now and is going to in the future. Either you can take the approach of going to some really shady place where you're not going to be put in jail if you choose to live there, like Bulgaria or whatever, and you can base your operations there and you can try to do things that way, or you can take it head on and you can take things for what they are and follow the rules while still opining on them such that you can affect them in a way that is beneficial operationally for you in the future. Like, just to give you one offhand example, we worked with the New York State Department of Financial Services on creating the basis for what is being called preliminarily the BIT license for operation of Bitcoin financial institutions in the U.S. And via working with them, we were able to actually help the Bitcoin community as opposed to leaving them in the dark and just kind of having them pass carte blanche guidelines that really hurt Bitcoin operations in the U.S.
Yeah, that's definitely something that is important right now in the Bitcoin community, is the whole idea of regulation and what to do with it, how much we should have, and how to work it out. And there's people who are worried that because there sometimes isn't very much regulation, that can actually stop people from doing business because they're afraid of what could happen because of regulation or anything like that. I just want to ask, because we've been talking about this a couple of shows ago, what are your KYC practices right now? What do you have to do in terms of AML and everything?
Well, I can't give you too much detail just because obviously if I tell you every bit of detail in relation to AML KYC stuff, that'll kind of be an instruction guide for money launderers and how to bypass those same structures within our organization. So I do have to be cautious, but basically what we're doing is we're complying with everything in relation to federal guidelines and state guidelines that doesn't involve Bitcoin. So what we've done from day one is we look at all of the rules that are in place as far as what constitutes cash and things like that, and worked with our legal teams to form kind of the safest approach to make sure that operationally we aren't jeopardizing ourselves due to having too lax of a compliance infrastructure, even before that compliance guideline system came into existence federally and on a state level as well. So we've looked at everything that prepaid providers have to do, phone card providers and their anti-money laundering structures, people like MoneyGram, PayPal, traditional internet value transmitters. And we've looked at how any regulations that apply to them apply to our model. We've looked at things like the Patriot Act, the deal in relation to specifically precious metals retailers. We've really run the gamut as far as compliance preparation, even before Bitcoin was something that regulators knew about. And to be honest with you, there were many times where we had to cold call regulators and say, hey, have you guys heard about Bitcoin yet? This is my third call. Could you look into it?
Yeah.
And the response was always, is there a crime you'd like to report? Okay, thank you for calling. We'll talk to you another day. Now, it's been a long road to get here, but I'm happy to see that federally and on a state level, we're seeing all sorts of guidance come up.
Yeah. Again, I think Tim and I would say that we're not huge fans of regulation, but at the very least, it's helpful to you. If you go through all that, you can be pretty certain that you're not going to be randomly hit by something like the Liberty Dollar operation or something like that, where they just decided that it was bad and destroyed it, basically. But if you're taking precautions like that, and if you're looking out for the regulations, you probably should be all right and don't need to be worried about anything like that. So that should be pretty good.
Well, that's exactly it. Nobody's a fan of regulation when it comes down to burdening the economic basis of a nation, whether it's anti-terror or anti-money laundering or, whatever your opinion is on farm subsidies, what have you. When it comes down to regulation impeding the economic growth of a free market like we have in the United States and most other nations in the world, it's just not a good thing. But at the same time, those regulations are going to exist to whatever extent they are, overbearing or not, and you simply have to work within them. And I would much rather have them exist and have a clear guideline than be living in mystery, just wondering, is my compliance structure good enough?
Right.
Are they going to come and throw handcuffs on me for not following some super obscure guideline? Things like that. I'd much rather know. So I'm sure it's the same situation for any institutional investors or potential entrepreneurs in the U.S.
You're listening to the You, Me, and Bitcoin podcast. We need your help. For starters, we would love it if you would take the time to visit our website, youmeandbtc.com. There you can find a unique Bitcoin address for every single podcast and article. We would be forever grateful if you could provide some feedback by tipping your favorite content. We also have a Facebook page that needs some likes. You can find a link on our site or go straight to facebook.com/youmeandbtc. We'll keep you updated there about ourselves and any important Bitcoin news throughout the week. Lastly, if you haven't already, make sure you subscribe to the show. You can find us on iTunes or sign up to receive email updates on our website. Thanks for your support. One piece of that sort of regulation that just recently came out was from the IRS. They decided that Bitcoin was property or would be taxed as property. I guess, I don't know if decided is the best word there. I'm not entirely sure who made the decision or if it went through courts or if just some executives decided. Tim, I know you probably have an article or two about that. You want to take it away?
Yeah. I mean, I guess I'll just start out by reading the article from USA Today. It's just IRS, Bitcoin is not currency. It starts out, the federal government will tax digital money such as Bitcoin like property, not currency, the IRS said Tuesday in its first significant guidance on the virtual coin. Although Bitcoin may operate like coin and paper currency and can be used to pay for goods and services, No country accepts it as legal tender, the Internal Revenue Service said in its notice. Virtual currency is treated as property for the U.S. federal tax purposes, the notice said. General tax principles that apply to property transactions apply to transactions using virtual currency. So, one person shared it with me on Facebook, my father mentioned it to me, and it kind of all came from people who they know of Bitcoin, but only because they know me, and then they see it occasionally on Fox or with CNN where they're like, oh, well, did you see this? This is terrible. And I'm like, well, I mean, the IRS was going to do something. They were going to tax something. I mean, I think we were beyond the point where they were just going to say, no, it's illegal and just cut everything. I mean, the government wants a piece of everything, so, I mean, they see it's a lot of money they could make by taxing it, so, okay. I mean, this isn't that important. I mean, the only thing I can really see is that it's maybe good for the price. I mean, it hasn't, I told you that a few days ago, Daniel, and then...
Yeah, Tim, a couple days ago, he just was telling me about this ruling, and he said, yeah, it's probably going to be good for the price because at least people have confidence now because they know how it's going to be taxed and everything. And this was a couple days ago, and I think it's fallen over $100 since then. And I got on him about giving me bad financial advice, and he told me that Bitcoin is not even physical, and you can't even hold it in your hand. So he told me he would give me an ounce of silver for every one of my Bitcoins. So
I said 10 ounces, Daniel. At least be fair for that.
I thought it was one, but either way.
But yeah, I knew it was going to get taxed by someone, and so it's not like that big of a surprise that it eventually came out.
Either one of you, do you think, ignoring the whole regulation in general question, if we just assume that regulation is going to happen, either one of you, do you think this is a good ruling? Do you think it's better that it is taxed as property, or should it have been considered a currency? What do you think?
It's a tough question, I have to say, because Bitcoin is really the first time we've seen anything that natively and naturally by itself exhibits elements of both commodity and currency. I mean, the closest thing that we've ever really had is people using gold to actually buy stuff from each other in the gold rush and thereafter, up until the early 1900s, really. So it's hard to say. I mean, we've kind of got the basis in some of the other things that the IRS has done previously. But at the same time, I have to think that we should have something closer to a Forex type model, because most of the user base, well, a lot of the user base coming into Bitcoin is interested in the utility, as well as the economic gains that they might reap from investing, quote unquote. But a lot of people simply just want to buy and use Bitcoin for stuff, whether it's beef jerky or gold or whatever else is out there. It's an easy transfer medium, especially for the bankless.
That's something that we always talk about, how even no matter what the value of a single Bitcoin is, it is just extremely convenient and easy to use. You can send basically any amount of money, basically anywhere, basically instantly, basically free, and that's pretty awesome. I have what I think the official notice is, because it's on irs.gov, but it mentions too how if you pay an employee with virtual currency, it does have to be reported, but I'm guessing for tax purposes, I guess you would pay an income tax at whatever the value was when it was paid. I guess that's how the income tax would be calculated, but then it would be interesting if somebody paid you in Bitcoins, you pay the income tax, and then they go up in value again, and then you spend the Bitcoins. I guess you got to pay capital gains on that again, right?
Yeah. I mean, I'm really not an expert on the minutia of taxes, because
Yeah.
I have people to take care of that for me, since I don't want to screw it up myself. I mean, just to be totally honest, it's one of those things. I sleep better at night putting it in the hands of an expert.
Right.
Kind of like, to the doctor or the dentist or whatever. I'm not going to grab a pair of pliers and try to do it myself. But yeah, that sounds about right. I mean, you buy Bitcoins and you spend them on XYZ, and they go up in the meantime. You have to pay your capital gains on however much they went up.
Right. Again, I'm not an expert by any means, but yeah, it's just interesting to think about these things. I wonder if also I'm pretty sure you can write off capital losses, right? Can't you, if you lose money with an investment, sometimes you can write that off or use it to your advantage, right?
That's exactly correct. You can write off capital losses in certain contexts.
That'll be interesting to see. Honestly, I'm a little worried just because, I mean, it's nice to see that there is some sort of official ruling out there, but that doesn't change the fact that I'm just like you, Jay. I don't know how to go about reporting anything, or I think I've kept some sort of good records, but I mean, on the one hand, they probably don't care much about me just because I'm a really small fish compared to some of those others out there, but it's still going to be interesting to figure out how the heck I'm even going to go about all of this, or keeping track of it and reporting it and stuff like that. That'll be interesting.
Well, just the tip from me, based on how I've done things for the last 4 years, ever since I started messing around with the volatile world of Bitcoin. Records up the wazoo. I keep CSV files from any exchange I mess around with. I keep CSV files, if available, from any bank I mess with. I keep paper copies of bank records, and then I scan them immediately, and they get archived digitally in multiple places and backed up. And, just et cetera, with different accounts being used for different things. And I just keep ridiculously verbose records, and I pass everything off to my super gnarly tax experts, and they wade through it for like 3 months straight, and then eventually give me something that I rubber stamp and send them.
I don't know if I could afford it yet, but maybe that should be one of my goals, is just to find somebody who can deal with it for me.
Yeah, I mean, realistically, it's better to be safe than sorry in any context when you're talking about Bitcoin, whether it's security or taxes, what have you. It's just important to exercise extreme caution.
Yeah, I'm just going through another article about the IRS answering specific questions, and I actually haven't read the answer yet, but question: does a taxpayer who mines virtual currency, for example, uses computer resources to validate Bitcoin transactions and maintain the public Bitcoin transaction ledger, realize gross income upon receipt of the virtual currency resulting from those activities? Answer: yes. When a taxpayer successfully mines virtual currency, the fair market value of the virtual currency as of the date of receipt is includable in gross income. See publication 525, taxable and non-taxable income, for more information on taxable income.
Yeah, I wish I thought of that a few minutes ago, because that is definitely an important aspect of this whole thing, is the miners. And I mean, again, not an expert, but according to what that says, it seems like as soon as you mine coins, that's considered income, which I'm guessing you just would pay income tax on it. And then you have them in their property, and you could have capital gains or capital losses or who knows what. But yeah, that's interesting that mining is considered a form of income.
There's also another one, it's actually the next one on there. Is an individual who mines virtual currency as a trade or business subject to self-employment tax on those income derived from those activities? Answer: if a taxpayer's mining a virtual currency constitutes a trade or business, and the mining activity is not undertaken by the taxpayer as an employee, the net earnings from self-employment, generally gross income derived from carrying on a trade or business, less allowable deductions resulting from those activities, constitute self-employment income and are subject to the self-employment tax. So
they figured out every single little way that they can pull a penny out of Bitcoin.
Yeah, I mean, that's, you guys were talking about how, all this stuff, I mean, they already tax everything. You tax when you make the money, you tax when you spend the money, you tax when you invest the money. It's all this stuff. But, I mean, at least they're figuring out they're actually using the terms correctly.
The only difference here is that now they can tax us when we print our own money.
Yeah.
That last one that you read was kind of technical, and I'm not sure if I followed everything not having it in front of me. But it seems like...
No, it doesn't help having it in front of you.
It seems like maybe it was saying that, is it like pool operators who are involved in mining, but they're not actually mining? Is that the kind of thing it was talking about? Didn't it, at one point it said they're not actually mining?
I think it was specifically talking about people that get like a little BFL box and stick it in their basement or whatever. And it just so happens that makes up like 20% of their yearly income. In what I'm understanding is that they call that self-employment if it's making up, some significant percentage of all the money you make every year. It's not done as an employee from an LLC or a corp or whatever, And basically what it comes down to is that if you're a miner, they're going to charge you.
Yeah.
And if you're a miner, they're going to charge you more.
Yeah, like we said, they're going to do what they can to get their hands on anything they can. Now, it is true that even though these regulations are out there, and yeah, plenty of people probably are going to pay taxes like that, there are also, people with a BFL box in their basement. I don't think the IRS really cares about that. I mean, if they can get money out of them, awesome, but they're not going to go after them because it's just, even if they made a few thousand off of it in a year or so, I could be wrong, and obviously, please don't, this is like that financial disclaimer, like...
Yes, do not take advice from Daniel Brown.
Don't sue me if the IRS does come after you.
Yeah, I am a licensed anti-IRS raid expert.
Yeah, exactly. But in general, for not everyone, obviously there are larger corporations, I don't know if there actually are any yet, but I know there will be eventually fairly big companies that they mine, and that's how they make their money. Like BFL manufactures mining things, and I guess they've been working on like data center mining and things like that, so they're close to that sort of category, but either way...
I just so happen to know the principals at an organization that's the largest actual Bitcoin mining operation in the world. They broke 2 petahash the other day.
Oh, wow.
So,
and that's not a pool, and that's not cloud mining or anything like that. That's just an individual, well, not one person, but one corporation or company or whatever, right?
It's everything. I really can't say anything without breaking NDAs more than that.
Okay.
But it's an exhaustive operation, and it's massive, and it's way profitable.
Okay, and then, so yeah, that's the kind of thing I would be talking about, and I think either more of those are going to sprout up, or those are going to continue to grow, but I would definitely think that that's the kind of people that the IRS actually cares about, and people with little boxes in their basement, they're not going to be too upset about that, or even probably...
It's not about them being upset, because, I'm pretty sure we all know that the IRS people are soulless, but it comes down, I'm pretty sure, to just a cost. If they're going to get more money out of you than they're going to spend getting it, then I think they're going to do it if they notice you. Now, yeah, you're right. You have to be big enough for them to notice, but yeah, if they're going to get money.
At that end is that 300 million little boxes is a lot of pennies that stack up real quick.
Yeah.
That's why they still would make a regulation like this, because they know a lot of people, maybe not everyone, but a lot of people are going to follow it without any hassle. They're just going to make a regulation and then wait for the money to come in, for the most part. And so that's why the regulation exists. Well, and for also the bigger companies. But yeah, like I said, smaller ones, especially the really small ones, not a huge deal. Because you're, like you said, Tim, it's a cost benefit. I don't know, just sending an agent to, give you a phone call probably costs them a couple $100 in salary and whatnot, so.
They're totally happy to let the Googles of the world have their actual taxable income rates of 15%.
Yeah.
So I'm sure that with the mining operators, it's going to be the exact same thing. As long as they get their pound of flesh, and, it just so happens to be a larger pound from gorilla, they're going to be pleased.
There's one last question on this article I'm looking at, which kind of bothers me only because the IRS doesn't really answer it. The question is, Will taxpayers be subject to penalties for having treated a virtual currency transaction in a manner that is inconsistent with this notice prior to March 25th, 2014? And their answer is, taxpayers may be subject to penalties for failure to comply with tax laws. For example, underpayments attributable to virtual currency transactions may be subject to penalties, such as accuracy-related penalties under section blah, 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 whatever. And looking at the rest of the answer, it doesn't seem like they ever answer the question. They just say that that you can get penalized, but they never come out and really answer if they might go after people for stuff before March 25th, 2014.
Honestly,
what they're saying is if you did something egregious, they'll probably come after you, but otherwise they'll just let you be. But I may be reading into it incorrectly.
I mean, I'm hoping that's what it is. I just didn't get why they didn't just come out and say that.
Even if that is what it is, it's still kind of a ripoff that they're allowed to penalize you for something that you did before an announcement like this. Even if it is like a big corporation that...
I mean, if you have operations, they'll look at your operations and they'll say, okay, well, you were doing X, Y, and Z before we said you had to do X, Y, and Z, good for you, pat on the back. But they'll look at your operations if you weren't doing X, Y, and Z and say, oh, well, X isn't too bad. Y is a little worse, but Z is really bad. What are you doing, man? That's the case where they come back to you and really kind of penalize you. So in the past, it's a relatively fair thing in the context of the financial world, the tech industry, what have you, when government likes to do that.
I guess it'll just be interesting to watch and see. I think we can be pretty certain that there will probably be some high-profile cases over time, just as Bitcoin and cryptocurrency grows and companies and operations start up here and there. We'll probably see some interesting court cases or who knows what, and it'll be interesting to see how everything goes.
Yeah, absolutely.
Sort of a tradition that we want to kind of start, and we failed after we did it with our first guest and then failed for our second guest. But just for fun, we want to kind of have people tell us a personal story about their background in Bitcoin. Preferably not how you got started in Bitcoin, because that's what everyone likes to talk about. But just any kind of interesting story that happened to you. Could be, if it's a funny story, maybe it's about this one time that you got scammed. Any interesting, just personal stories that you would like to tell us?
Man, I mean, it's been such a multitude of interesting events over the years. I remember distinctly, I went to DEF CON a few years ago, and this is, I'm not sure how familiar you are with DEF CON. It's kind of the most largely known hacker convention in the world. People travel from everywhere to Las Vegas, and you can't use your credit card or cell phone there for like a week straight, but it's a heck of a lot of fun. So I went to DEF CON with a buddy of mine who is also a Bitcoiner, and we asked some random people. We made a bet between each other. I said, hey, so I bet you that 1 out of 10 people is going to know what Bitcoin is. And he goes, no, there's no way. I said, yeah, I bet you we're in the right crowd. He's like, there's just no way. I'm like, yeah, I'll even make it more interesting. You have to ask girls. He goes, okay.
Wow.
He goes out, asks one girl, and of course she knows what Bitcoin is. She didn't know exactly what it is or what the value was or Mount Gox or anything like that, but she knew the name. And, started asking us questions about it. I was like, see, I told you, man. I was like, dude, no, that's just a one-off. There's no way that could ever happen again. No, ask another one. He's like, what do you mean ask another one? I'm like, ask another girl. So he goes up to another girl and asks her. And he, of course, found the second girl on the face of the earth that knew what the phone was. And he was just dumbfounded, and I'm like, look, dude, it's getting popular. And he ended up going out and asking 8 more women throughout the day if they knew what Bitcoin was, and every single one did.
Wow.
And then he started asking random strangers all over the place, non-DEF CON attendees, and some of them did, some of them didn't, but he got a very sort of overwhelmingly positive response as far as people knowing what it was, and hours of questions afterwards as far as details, like how does it work, how can I buy some, yada yada.
What did you say the approximate date was for that?
I think that was DEF CON in like 2011 or 2012, something like that.
That's pretty cool. That's exactly the kind of story that we would want. That's pretty awesome.
Yeah,
it was a good time, and I got to hang out with a couple other Bitcoiners that were very, very early adopters in the space who ended up coming out and meeting us in Vegas. And interestingly, I don't know if you remember this, it might be before your time. Do you know who Pirate at 40 is?
I don't think so.
no.
He ran what is basically known as the largest Bitcoin scam in existence. It was a pyramid scheme, and he ran it for like a year and a half, and ended up with like millions of Bitcoin circulating through this thing. And he was paying 28 or 7% weekly compounding interest rates.
Wow.
On Bitcoin, which is like bubbling during this period anyway already. So it was just an entire mess where a large number of people ended up making a bunch of money, and then a much larger number of people got screwed.
Yeah.
And what he did is he reached out to me right when I was in Vegas for DEF CON, and basically made a very brief semi-public appearance to kind of kiss my ass because he knew I had a bunch of Bitcoins floating around. And all other people that he had reached out to ask kiss were very nice and sweet. And it was kind of like he had done so. But this dude like supposedly flew out in a private jet and just kind of like blew everybody's minds with just showing up in the middle of DEF CON. And that was definitely kind of some surreal icing on the cake. Meeting the biggest scammer in Bitcoin. It gave me chills up and down my spine, and still does to this day, to be honest. And this is before the scam actually became apparent. This is during the early days where people were reaping like millions of dollars a month profit out of it.
Dang.
Yeah.
Yeah, I was going to say, did anybody do anything? Because, I didn't know you were saying it was before all that came to light.
Oh, yeah, way before. This is right when, this guy was just the most popular dude in Bitcoin because he was paying people millions of dollars a week to do absolutely nothing. And some of the other sort of old timers had seen this dude pop up, and we're talking amongst ourselves saying it must be a scam. There's no way he's generating this. And what he was saying is that he had a proprietary system for trading on the markets to generate revenue with arbitrage and hedging and blah blah blah. And it was just a crock of nonsense. So myself and some of the other old timers were looking at this and saying there's no possible way that this dude is actually doing that. And I went out of academic curiosity to meet this guy face to face, just to kind of get my take on who he was and what was going on there. And it was a very, very strange experience, to say the least, because I was beyond suspicious before even, getting a kind of reach out from this guy. And then he reached out to me, and I was just immediately creeped out because I knew he was trying to get his hands on coins. And I went in very wary and came out even more wary than I was initially. So
Right.
it's good to see my instinct was right on that, because he ended up with like some ludicrous number of coins. I think it was like 400,000 or 500,000 coins that he managed to run off with.
Wow. And so I'm assuming he's kind of lost right now, right? Right?
Well, he, go figure, is very well funded for legal stuff. And the feds came after him and filed a case against him in court. And this was, back in, I think, early 2013 is when they filed this case in Texas. But his location is known. He's embroiled in this court battle for like a year. it's pretty much at a standstill, though. So it kind of seems like he got off scot-free.
Yeah. I'll just give one last thank you to Mr. Shore, Mr. Jay Shore, the founder of Coinabul.com. Thanks for joining us today.
Yeah, it was my pleasure.
Thank you very much.
Thanks for listening to episode 14 of the YMB and BTC podcast. Don't forget to visit our website, YMBandBTC.com. If you're willing to make use of the tipping addresses, that would make our days. And remember to tune in next Thursday